While the Western world has been glued to their screens watching political drama and trade war headlines, a silent heist has been taking place right under our noses. We are witnessing the quiet execution of a strategy that will completely rewrite the economic map of the next century. And here is the terrifying part. Most people, even the so-called financial experts, haven't noticed it yet. We're not talking about a military invasion with tanks and jets. We're talking about something far more subtle, far more patient, and ultimately far more deadly to the American economy. China is systematically cornering the market on the physical resources that power modern civilization. While we argue about politics, they are buying the physical world. The implications for your savings, your investments, and the purchasing power of the dollar in your pocket are staggering. Before we go any further, you need to understand one thing. This is not a conspiracy theory. This is not speculation. This is a documented financial strategy, backed by billions of dollars in actual transactions, happening right now across global commodity markets. Once you see the pattern, you cannot unsee it. China has realized that the era of paper wealth is ending, and the era of hard assets is beginning. They are no longer content being the world's factory. That is old news. Their new goal is to control the supply chain for every single critical material that modern technology depends on. From the semiconductors in your phone to the batteries in electric vehicles, they are locking down the supply at a pace that should be setting off alarm bells in every Western capital. By the end of this series, you will understand exactly how this game is played and why the paper dollar is the primary victim. The logic behind Beijing's strategy is beautifully simple, yet devastatingly effective. If you own the ingredients, you own the final product. While Western nations were busy focusing on quarterly earnings reports and inflating stock market bubbles, China was playing a completely different game. They realized that in a time of crisis, he who holds the gold or the copper or the lithium makes the rules. They are not just buying commodities when prices are low, they are systematically capturing the source. Think about the implications. We are talking about a comprehensive national strategy to secure industrial metals across the entire periodic table. Rhodium for catalytic converters, palladium for electronics, and rare earth elements for the magnets that drive wind turbines and fighter jets. China already controls between 70% to 90% of global rare earth processing. Even if these materials are mined in America or Australia, they often have to be shipped to China to be refined because that is where the infrastructure exists. But here is the absolute genius and the danger of this approach. Every $1 billion China spends on a copper mine in Africa or a lithium deposit in South America serves a dual purpose. First, it secures a critical asset for their future. Second, and more importantly, it allows them to dump US dollars. For decades, China hoarded dollars as reserves. Now, they are converting those paper IOUs into tangible hard assets that have intrinsic value. They are trading a currency that is being printed into oblivion for physical materials that cannot be printed. This is the wealth transfer in action. They are getting out of the dollar trap by buying the physical world, leaving the West holding the bag of depreciating paper currency. To see this strategy in action, you don't need to look at classified government documents. You just need to look at the silver market. Right now, silver is screaming a warning that the rest of the world is ignoring. Over the past year, silver prices have gone absolutely parabolic, trading well above $76 per ounce. If you had the foresight to buy silver at the start of 2025, you would be sitting on gains of nearly 150%. But this isn't normal market behavior. This isn't just inflation. This is a supply shock crashing into a wall of unprecedented demand. Here is what has changed. Silver is suffering from an identity crisis. For thousands of years, it was just money, coins in a vault. But today, governments have quietly reclassified it as a strategic critical material. Why? Because without silver, the modern world stops functioning. You cannot build a solar panel without it. You cannot manufacture advanced semiconductors without it. It is inside every Tomahawk missile and every fighter jet. The green energy revolution and the AI revolution are both built on a foundation of silver. We are facing a math problem that cannot be solved. Mining production is flat or declining, while industrial demand is exploding from every sector simultaneously. Too many buyers are chasing too little metal. But the real driver here isn't just Apple or Tesla needing silver for products. It is China. They are absorbing physical supply at a rate that suggests they know something we don't. They treat silver not as a trade, but as a matter of national security. And as we are about to see, this has broken the pricing mechanism of the entire market, creating one of the biggest lies in financial history. If silver is so critical and supply is so tight, why isn't the price $500 an ounce already? This is the most common question I get, and the answer reveals the biggest lie in the modern financial system. We need to distinguish between paper silver and real silver. The price you see on your screen, the spot price, is largely determined by the futures market in New York and London. This is a casino where banks trade paper contracts that claim to represent silver without ever actually touching a single bar of metal. Here is the terrifying reality. It is estimated that for every single ounce of physical silver that actually exists in the vaults, there are up to 100 paper claims floating around in the market. It is fractional reserve banking applied to precious metals. Wall Street has sold the same ounce of silver to 100 different people. The system only works as long as investors are happy holding a piece of paper. But the moment everyone asks for their actual metal at the same time, the game ends. And that is exactly what China has figured out. Chinese investors, both the state and the public, have stopped playing the paper game. They know that in a resource war, a futures contract is just a worthless promise. They are demanding physical delivery. They are draining the vaults. This is causing panic because it exposes the fraud. When you drain the physical metal, the paper leverage breaks. We are watching a run on the bank, but instead of cash, the bank is running out of the strategic materials needed to build the future. And when the physical supply dries up, the paper price becomes irrelevant, and the real price explodes. The most shocking evidence of this resource war isn't found on Wall Street. It is found in the desperation of Chinese investors. Right now, we are witnessing a phenomenon that theoretically shouldn't exist in a free market. Investment funds in China that hold physical silver are trading at absurd premiums. At one point, investors were paying up to 60% above the net asset value for shares in silver funds. Let that sink in. People are willingly paying $1.60 for one Pohrs dollar worth of silver. Why would anyone do that? It sounds like financial suicide. But it reveals a terrified psychology. These investors are not stupid. They are desperate. They are terrified that if they don't buy now at any price, they won't be able to buy it all later. They are paying a scarcity tax. They are front-running a future where silver is unobtainable. This panic has broken the global pricing mechanism. Usually, if silver is $76 in London and $85 in Shanghai, traders would buy low and sell high until the prices match. That is called arbitrage. But that gap, the arbitrage window, isn't closing. Silver in Shanghai is consistently trading about 10% higher than the rest of the world. This proves that the physical metal simply isn't available to move. You cannot ship what doesn't exist. The supply chain is so tight that the normal laws of economics have stopped working. This isn't just a bubble. It is a run on the bank of global resources, and the vault is running dry. If you think the situation with silver is terrifying, I have bad news. Silver is just one single square on the board. The reality is that China is playing a game of benevolence, monopoly, with the entire periodic table of elements. While Western politicians debate green energy goals, Beijing has quietly cornered the market on the actual materials needed to achieve those goals. They aren't just stockpiling precious metals. They are locking down the fundamental building blocks of the 21st century. Look at the list. It is exhaustive. They are stockpiling copper, the absolute backbone of the global electrical grid. They are securing lithium and cobalt, without which you cannot build a single EV battery. They dominate nickel for stainless steel and rare earths like neodymium and dysprosium for the permanent magnets used in wind turbines and robotics. They are even hoarding obscure metals like gallium and germanium, which are essential for advanced semiconductors and fiber optics. This is not random buying. This is a coordinated state-level strategy executed by state-owned enterprises, SOEs. These companies have unlimited funding and a mandate that goes beyond profit: secure the supply. It wouldn't surprise me if billions of dollars of these materials are sitting in undisclosed warehouses that never appear in official government statistics. The strategic implication is brutal. By controlling the raw materials, China doesn't just get to participate in the future economy, they get to charge rent on it. They get to decide who builds high-tech industries and who remains dependent. This is leverage that doesn't require firing a single shot. It is the weaponization of the supply chain. And while this resource war is heating up, a second, even bigger threat is emerging from an unexpected place: Japan. While everyone is hyper-focused on China, a second financial earthquake is starting in Tokyo, and it might actually be the trigger that brings the whole system down. Japan has historically been America's most loyal financial ally. For decades, they recycled their trade profits back into the US system, buying trillions of dollars of US government debt. They kept US interest rates low and the stock market high, but that relationship is breaking. Not because Japan wants to hurt America, but because they have run out of choices. Here's the mechanism that is about to break the bond market. The Japanese yen has collapsed. To save their currency from becoming worthless, the Bank of Japan has been forced to intervene. They raised interest rates recently, but it wasn't enough. The yen is still weak because the gap between US and Japanese rates is too wide. Now, Japan faces a nightmare scenario. They have a debt-to-GDP ratio of 250%, the highest in the developed world. They cannot raise interest rates high enough to save the yen without bankrupting their own government. So they are left with only one option to generate the cash needed to defend their currency: selling foreign assets. And what is their biggest foreign asset? US Treasury bonds. Japan holds over $1 trillion in US debt. They are the single largest foreign creditor to the United States. If they are forced to sell even a fraction of that hoard to prop up the yen, it floods the market with US bonds exactly when the US government is trying to issue trillions more. This is a supply tsunami. If Japan stops buying and starts selling, who is left to fund the American deficit? This is the Panther betrayal. By math, Japan is being forced to choose between saving its own currency or propping up the US dollar, and they are choosing themselves. But selling bonds is only half the problem. There's an even bigger, invisible monster lurking in the financial plumbing, the yen carry trade. For the last 15 years, this has been the free money machine for global Wall Street banks. The mechanism was simple. Borrow yen at 0% interest, because money was free in Japan, swap it for dollars, and invest in high-yielding US assets like stocks and bonds. It was the perfect arbitrage. Trillions of dollars flowed into American markets essentially for free. But now, the machine is jamming. As the Bank of Japan is forced to raise interest rates to save the yen, the math of this trade is flipping upside down. If you borrowed billions of yen, and suddenly the interest rate on that loan goes up, and the yen gets stronger, you are getting squeezed on both ends. Your debt is getting more expensive every second. This is triggering a margin call on a global scale. Institutional investors are rushing to the exit. To pay back their yen loans, they have to sell their US assets, stocks and bonds, and buy back yen. This creates a vicious cycle. Selling US assets crashes the US market, and buying yen makes the yen stronger, which hurts the remaining borrowers even more. We are talking about the potential unwinding of a multi-trillion-dollar leverage bubble that has artificially propped up US asset prices for a decade. When this liquidity evaporates, the US dollar doesn't just lose a buyer, it loses its biggest artificial support system. Now, I want you to step back and look at the complete picture. This is where the terrifying math of the feedback loop kicks in. If we only had China buying metals, the US could survive. If we only had Japan selling bonds, the US could probably manage. But we don't have them separately. We have them simultaneously. These two forces are colliding to create a perfect storm for the US dollar. On one side, China is actively dumping dollars to buy real assets, silver, gold, copper. On the other side, Japan is forced to dump dollars to save its own currency. Who is left to buy US debt? The answer is nobody. This leaves the US Federal Reserve with an impossible choice. If foreigners stop buying US Treasury bonds, interest rates in America will skyrocket. The US government, which is already $36 trillion in debt, cannot afford high interest rates. It would bankrupt the Treasury. So, the Fed will have to step in as the buyer of last resort. They will have to print trillions of new dollars to buy their own debt. And this is the death spiral. Foreigners sell US debt. The Fed prints money to buy that debt. Printing money devalues the dollar further. A weaker dollar makes commodities, like silver and oil, more expensive. China sees the dollar getting weaker, so they accelerate their buying of hard assets. Round and round it goes. Each time the cycle spins, the dollar loses purchasing power, and physical assets gain value. We are entering a phase where the paper price of everything is about to become meaningless because the currency measuring it is broken. So where does this leave you? If you are holding all your wealth in dollars or standard dollar-denominated assets, you are standing on a rug that is being pulled from under you. The rules of the last 50 years are dead. The new rules of wealth are simple but brutal. In a world where central banks can print infinite paper, the only things that hold value are the things that are finite. China understands this. That is why they are trading paper for copper, lithium, and silver. Japan understands this. That is why they are desperate to stop the bleeding in their own currency. You need to understand it too. The great wealth transfer isn't about money disappearing. It is about money moving. It is moving from those who hold paper promises to those who hold real, tangible scarcity. This is not a call to panic. It is a call to position yourself. Ask yourself, do you own assets that can be printed by a politician, or do you own assets that require energy and effort to produce? The next decade will be volatile. We will see currency crises, supply shortages, and inflation waves. But for the informed investor, this is the greatest opportunity of our lifetime. You now see the board. You know the moves. The machine is running. Don't get caught holding the bag. If you want to stay ahead of this transition and understand the next phase of this financial war before it hits the headlines, make sure you are subscribed to this channel. I will keep tracking the data that Wall Street ignores.